And I saw that we had a few individuals who are here for the first time. I want to say welcome. And if you have any questions, feel free to pop them out. We'll have a Q&A session towards the back end before we get into individual stocks. I'll say a lot of people will say there are no stupid questions. Well, there are stupid questions. We'll just not make you feel stupid when you ask them. Okay? Is that a deal? Okay. Let's get started here tonight then. We have tomorrow is Veterans Day, and if you want to look up, there are a number of freebies and whatever for veterans and whatever. I'm going to partake of a couple, but yeah, I do basically the restaurants things. A couple of times I play golf, but my back's too bad right now for me to do that. I want to start by saying that trading involves a risk of loss of capital. Make sure that you are understand what you're doing. I would strongly suggest that you use simulated trading before you try anything with real money. And I'm an ex-U.S. Air Force fighter pilot with master's degrees in computers and business, for those who haven't been here. And active trader since 98, full-time trader since 09. And I'm a technical trader, but I do look at limited fundamentals. Like I do look at earnings, and I don't use like PE ratios or any of those kind of fundamentals, but ownership things that are like short interest and stuff, I will use those. So those, I think they're techno fundamental type of things. I do moderate from time to time for hit and run candlesticks, fill in when necessary and needed. I do provide one-on-one mentoring, and if you go to the website, you can find myself, Ed, Rick, or Doug. Stick around to the end of the presentation. We have a special offer for you. And here's what we're going to do tonight. For those who've been here before, it's standard same old, same old. But for the others, it's economic and earnings calendar we're going to look at. We're going to look at a market overview. Then look at some trade ideas. And I have a few of both sides, right? Long and short. Then we're going to go into the Q&A. And I emphasize the word, it's not stock specific. So wait until I put up the crosses there, and then you will have a chance to put up one symbol. And please let me know if you're long, short, or looking long or looking short. Again, time permitting. Because Monday's a quasi-holiday, the markets are still open, but we don't have economic releases. So things are pushed to the end of the week, really. We have CPI on Wednesday. Uncle Jerome. Yeah, I'll post it out there on my no sound. You want to check something? I think everybody else, Carlos. You help me out there, and you would. Jobless claims on Thursday. PPI petroleum report. It moves from Wednesday to Thursday and back half an hour. And then Friday we get this blast of retail sales, Empire State, import-export prices all at 8:30. Then industrial production at 9:15. And then we open, and then business inventories at 10. All right. We're starting to wind down on earnings. There's quite a few companies out there, but most of them are small cap, and they don't meet my criteria. They aren't either greater than $5. They don't have 485 or so thousand shares traded in the last month, and they don't have an average true range. Now those in yellow have greater than a 10% short interest as measured by the float short. So we do have a few out there. There's only about 20 or so a day, but there's some important ones out there. Walmart comes to mind on Thursday. Cisco, NetApp, NVIDIA after the bell on Thursday, so I call it a Friday trader. Well, I'm modulating and other people are hearing me, so I have no idea. Here's the market overview. And let's go to here. All right, I like to start off with oil. Oil got up to this $57, 50, almost 58, I guess, and then we are still in an uptrend, but the momentum is waning a little bit as measured by the stochastics RSI. As long as we continue to grind higher, I wouldn't see shorting it at anything like that. Hey, Jim, thanks a lot. Appreciate that. Go jump to gold. On a 6-month chart, we've been in this downtrend after we zoomed up to 1560, 1575. And we've just we pulled back twice to the midpoint of this downtrend. Looks like we're pulling there again. My stochastics RSI says that we could potentially curl back up at any moment, but we do not have any kind of bullish or buy signals here. I don't think I'm going to think about going long until we get above 15 and a quarter, though. All right, let's look into the equity markets then. This is the S&P 500 futures. I like to look at the futures, 2 reasons. One, I can actually get an indication tonight what we're doing, and they're pretty much continuous, so you don't get gaps. And we've been in a pretty steady uptrend since about a month ago, in September. Sorry, October. And we've been up, up, up. We've had a few days where we've got up to the volume of price levels, like 3,000, 3,005, and we kind of stopped and paused for a moment. But we're still grinding. One thing that's not giving me any great help at all, and it is secondary, is the stochastics RSI. It's kind of in fairly positive territory, somewhere between the 70 and 90% level. Yeah. In fact, traditionally, September until mid-October is a weak point in the market. And from mid-October is when the rally happens, and it shows up on a monthly basis as October. But the first part of October, most of the time, is fairly weak. And the middle end of October beyond. And I have a theory, I can't really prove it, but my theory is that's when we get earnings kicking in. From mid-October to end of October into mid-November. And then we and then we just kind of peter out, and then we get into the Santa Claus rally. So that's my theory. Can I prove it? No. Can it be disproved? Probably not either. Okay. All right, let's go look at the Dow. Dow futures look very, very similar to the S&P futures. We did break out to new highs. We are pulling back nicely. The stochastics RSI is giving me more help on that than the S&P, which was kind of flaky, kind of bounce all over the place. NASDAQ, fairly strong here. It kind of led us on this breakout. It didn't really pull back. It went sideways for 2 or 3 days. We had a continuation candle here on the daily. I don't see a ton of those that show up on the dailies, but this one showed up right here around the 1st of September, and we haven't looked back. Russell was kind of the bastard child for the longest time, but now it's kind of caught up. It was up 2 or 3 days when the others, we probably have some sort of minor rotation going on. Stochastics RSI, it's not really giving me any warm fuzzy that we're going to break out and do us run like a scalded dog. Well, the last I want to cover here is the VIX. There's no fear out there in the markets right now. None whatsoever. So, be that as it may. I want to show one other thing. Sorry, but the dog got underneath my desk and stepped on the power strip and it turned off my access to my monitors. Not exactly much of anything else, but I did have to go through a reboot of everything. So let us look at the T2122, which is a proprietary indicator by Warden Brothers. It's proprietary in what they had get the data feed, but it's really just a monthly high divided by the monthly lows, 4 weeks or 20 days. Other places, I think even Thinkorswim have things that are similar to it, but not exactly the same. Now, T2122, we're making new highs here, but we only have less than 60% of the stocks are making monthly new highs. 60 over. It's a kind of the ratio is 60%. So what is this telling me? Somebody asked me that last week. I thought I want to reiterate this, that if this number gets down in the 50s to the 30s and we're making new highs, which doesn't happen that often, that would tell me that we're going up on fewer and fewer stocks leading and participating in the rally. So we've got leadership that's dragging us higher, and it's starting to get more and more focused and more narrow. So that means that the breadth of the market could be getting smaller. Now, there's other T signals that talk about breadth and whatever. I'm not as up on that, but I'm going to look at the T2101 here, and the breadth here is getting low. We need to get more and more stocks participating as we go higher. The blue line is the S&P 500, and the T2101 is the dash green line. That's T2101 we looked at. 103, it was Marty Zweig came up with this indicator. Some people like to use the McClellan oscillator to tell about breadth. I can see him primarily in T2122. I've trained my eye to be relative to this, and none of these are absolutes. When we get up into this, the numbers of participations up here in what I call the pullback zone, we usually get a pullback at some point. In the bounce zone, we get a bounce at some point, usually fairly close. If we get down below the 7.5%, we're going to get a bounce. Now, does that tell us how high the bounce is going to be or how deep the pullback's going to be? No. Does it tell us how long it's going to last? No. It just says be careful. This is a secondary indication, but it's kind of a canary in the coal mine, giving us warning that the markets may be getting a little bit tired and might need some rest. Let's go back to our presentation. And we have some trade ideas. I posted those earlier. I can post them again if we need be, but let us okay. All right, I'm going to start off with the bulls. Here we go, yellow bull. Aflac reported. We zoomed up. We're basically riding the T-line higher. Let's go to a 6-month chart on that puppy. And Aflac looks like it wants to attack this 55 and potentially all the way up to 57. Let's go over here. Daily I've got it marked up here 54-ish to 57. We could get a stop at the 55, 55 and a quarter level. ALXN's the next one on the list. These are all in alphabetical order, that's all. Oh, thank you very much. Reposted, okay. Alexan over 110.50. Probably likes to go up to the 123-ish area. High volume spikes usually get retested. Not necessarily immediately, but they will get retested. BIB, I think, goes back up here to 310. We got a bullish signal, good bop on Friday. I don't know what the options look like, but that would be something to consider, but don't go chasing it. If the options are too spready, don't chase it. Let it run. EB, Eventbrite. I think it reported earnings on Friday, and we're probably heading up to 25. Now, one thing you don't want to do on these is chase them like the Dickens. You need to probably drill down and see if there's a 30 or 60 minute or even a 2 hour point where you can draw a line in the sand, and then you could go long. Right now, I think we need a pullback on this puppy. I have no way that I could tell you that you should chase this one, but maybe if we pulled back somewhere in this zone here, or just below 20, or go sideways. If we did something like that, that would be setting up for a continuation pattern. So on a continuation pattern, what you'd be looking for is a strong move up, followed by maybe something that resembles a pause, and then we get a breakout above that level, and you can then have a stop very tight. So sometimes they are I told you that it was changing. There we go. Sometimes it could be a flag, sometimes it could be a pennant, and sometimes it could be just move up and sideways. All those are basically versions of a continuation pattern. So I'm always aware of those. And this is where I use the technicals. If something reports earnings and it surprises the markets, either, let's just say, for instance, get the color right. Okay, here we go. Let's just say that a stock coming into earnings was in a downtrend. And then suddenly we get a surprise and gap up and then start moving higher. That right there is extremely bullish, because all these people were expecting, they were selling or they were shorting, expecting a bad outcome. Once it gaps up against it and does basically a kicker against the trend, anybody who's short is going, well, let's start it this way. People who had no position in that symbol will start looking at it because there's a surprise. People who were long are going to hold on to what they have and look to try to possibly buy more. And those who are short are going to look to try to buy to cover. So you have new people, old people, and short people. And I'm not talking about age or height. So you got a lot of people that are interested in buying this, which is why I like to look at stocks that have kind of a decline into earnings, that have pop surprise, and relatively high short interest, because they'll usually run. Let's look at Garmin. Garmin gapped up to 96.50. It got to if I look at a 2-day or a 3-day chart, let's even look at the weekly. It doesn't. It kind of disappears. But usually 1, 3, and 5, you can see what's going on. This one just kind of got an iffy here, but it gapped up from 87 to 95. It's not really a surprise that it's resting a little bit. So you've got this gap here, but what I do is I fill that in as one candle, and it moves sharply. Part of it's a gap, and part of it is a move up on the day. All right. Well, let's use the quad lines, quadrant lines here, and go from there. We pull back to about the 50% level. That's why we have the volatility dots above, because it did a little bit more of a retracement than it likes. I don't necessarily use the volatility stops as a buy or sell signal. Some people I know do that. And Doug does not like to go long. Does not like to go long if it's below the volatility stop. Bertrand, no. I normally use, again, I'm a very, very short-term trader. So when I swing, I'm looking at the 8, which is this light blue line, and the magenta line, the 17. So when I see a difference between those, like we've got right in here, that tells me we're in a solid uptrend. No matter what the price does here, we're still in an uptrend in solid. And so what am I going to be looking for? I'm only going to be looking for longs. I am not going to be looking for any shorts when I'm in an uptrend. I always, my rule tells me to trade in the direction of trend. Now, there are counter trend trades that do work, but I don't normally do them. I can find enough that go in the direction of the trend that I don't need to start. I don't really need to start trying to pick out those that are going to retrace, because in a heartbeat, sure, they could flip around and start back up again. So if you look at the hourly chart on Garmin, I didn't even see any signals other than maybe this one right here. That signal right there gave us an idea of a possible a short signal. But still, where is that blue line 50 pointing upwards? All the moving averages except the 8 and the 17, even on the hourly, none of them went negative. They went flat, but they didn't go negative. Another thing that I'll use, Bertrand, is I have a thing called an EMA only chart. If I have trouble deciding what's going on, I call this training wheels. Trying to train your brain to see the trend. I don't normally necessarily need them, but I advocate having this EMA only chart. In this case, I have the 8 and the 17. And that's how I judge the trend. Some people say, I want to see the 3 on there. In fact, the 3 only obfuscates, it confuses the situation. So I've taken it off. It's too fast, it zips all around. And these are the real trend numbers. And it's to help me visualize it. I will not necessarily trade them. Hess might be a little on the late side, but it's going up to about 74 and a half. Maybe if it came back to this breakout level and we had an opportunity to get in, that's why it's on the list. Heron Therapeutics. I had to back out a little bit, but we got a bullish signal right above the 200 on Friday. Some people might be interested in that. I think it's probably going up here at around 24 and a half or so. So if you're interested in a relatively inexpensive stock that trades decent, it reported on the 6th, so it's behind us. I Hertex reports on Tuesday. Hold on. And well, that's why it didn't show up on my list because it's estimated. If that's the case, well, no, it isn't. It's because it has a question mark. They don't know. Now let's go back to the last time it reported. 8.5 at 3.11.5. So somewhere in the next week or so, it'll possibly report. The one thing that I would suggest that if you ever have trouble, let's see now. Briefing.com. Come on, baby. Calendars, earnings. All right. Heron was on the list for last Friday. And it didn't report as far as we could tell. The other thing to do, go to their investor relations. And you can go over here to, I want to use the tab so I don't have to keep going back and forth. Okay. And if you can't find it, go down here to the bottom. There ought to be a way to contact them on their investor relations. There it is. Fire them off an email. Make a phone call. Yeah, that's true. But if if you're definitely interested in trading something, Ed, you can find out. This is kind of an educational thing. But you're right. If I have to work that hard at it, that better be the only stock setup that I see. All right, here we go. IBB here. We're coming up on 111 for 115. Again, it's an index. We have the biotechs have been kind of out of favor lately, so they've not really gone very high that fast. But in the last month, we've had a pretty good high. Yeah, so we've got all kinds of dates out there, Chris. We had last Friday, we had from Briefing, we've got Thinkorswim with a date, and you've got Finviz with a date. Nobody knows. Not on their website either. So yes, this has made a big run off the bottom. We've already tagged really the 111 area. This is kind of a double top. I think that it wants to probably go with the stochastics RSI coming off the bottom. I think it wants to attack 115. IOVA, another biotech, broke out on Friday. 26 is probably in the cards. I'm going to come back to Mohawk. It's really an example trade. MIME. I'm looking for this high volume spike here for a possible 45-degree runner, and I don't believe mine has high short interest, so it'll probably need some help with the earnings. Tiffany, 13% of the float is short. If you look at a 3-day chart, it's basically sideways. 140 is probably in the cards. That's about almost $15 above where we are, and these are the weekly. I almost took a flyer on that with some options last week, but they were a little expensive spready. So I said, you know what? I'll wait till this week and see if it settles down a little bit. And it's starting to. My stop would be under about 121, or we could wait for a breakout for it to go to 140. I would like to see something like what we got here on Friday the 1st. That would probably have been the ideal date to get in, and we would not have been stopped out yet. We'd still be in. Urban, it reports on 11/19, so we still have a little week and a half or so to go. Will it make a run to 33.82 before earnings? I don't know. Some of the retail apparel stores have been surprising on earnings. Some of the ones that surprise to the negative side are getting absolutely wasted. So we're getting kind of a mixed bag here. Thanks, Steve. Vertex. I think this is all-time highs, yeah. If we go break over that 203, we'll be at all-time highs. Balance of power changed right here around the 21st, based on the fact that it doesn't report again until February. It's probably earnings related. The one thing with the biotechs, especially if you're talking about the individual securities, individual companies. FDA news and drug approvals, those are more difficult to track than basic earnings. So I would strongly suggest that you look at the average two ranges here, and average two range as a percentage, and if you normally take in 400 or 1,000 shares, maybe take in half of that, because you're going to get some volatility there. Winnebago. Winnie has a high short float. There's the 3-day chart. You can see how this is basically going sideways. Nope, let's do this. That's kind of what we got going on. Yeah, we did not float back up, otherwise it would have been just a little bit of a J-hook. But last one on this list is Zillow Group. Zillow Group, let's go back to a daily. Zillow Group gapped up on earnings, gapped up to this 200 and stopped. If we get up over this the $38 level or so, we're setting ourselves up with this high float short to probably attack 42 something to maybe even 45. Fill that gap. This level of 42.65 is definitely in the cards. So Zillow is definitely on my watch list to do something like what Mohawk did. Maybe it pulls back. I'm up 60% on the options. Of course, I've already taken some off the table. And I'm still looking for it to climb higher based on stochastics and the balance of power to attack this 156 and a quarter. It's just kind of grinding and grinding and grinding. If I get any kind of sell signal after I'm up this much, I'll sell it and move on. But look what we found. We found gap up and it pulled back. and it got as low as the gap up air open area at 138, but ran into buyers again and pushed it up to close, well, right in here around 143, 143 and a half. That's strong. So when we see that, I'm just looking for a bullish condition to show up, and when it gapped up to 144 and ran, I immediately pulled the trigger. I didn't hesitate one bit. Why? Because I'd already looked at it and I said, you know what, if this does X, if it gets over the 144 and a half, I'm going to go long with the options, and I'm going to have my stop under about 141 and then follow the volatility dots. Okay. All right, let's go on over to some shorts. Ball Corp. It paused here at the 200, and I want to bring this out because it's not necessarily the greatest short in the world, but what I'm showing you is we had a strong down move, hit the 200, and we tried to bounce. We basically paused. And to me, the 50 and the 200 act as temporary resistance levels or temporary support. In this case, it was resistance. In this case, right now, that's acting as temporary support, but I can almost guarantee you that one's going to go away. Look at this balance of power here. I've got the fact that I have not seen a rally at all. It never even got a reversion to the mean up to the 8 or the 17. It got close. We don't see any change in momentum here in the BOP, balance of power. I think we break down to the downside. So what I would be watching for this one is a break under here around the $64 level. Where could it be going to? One of the levels here is around 59 something. Let's pull that out. And if you went short there, you're looking about 6.5%, 6.75%. How long will it take us to get there? Probably not very long. Stocks take the stairs up and just chug away and grind and grind. Most take the elevator shaft downwards. All right, Chubb Group. I bring Chubb Group up because it's here in a trading range. It is not the world. In fact, it may probably not even should be on the list, but I'm going to take that off. Chubb should not be on the list. We're in range bound here. We got down, we bounced up, we down, bounced up. Notice how the EMAs are trying to change. There are better shorts out there. Not many, but there are better ones. C.H. Robinson Worldwide. This looks like a classic short to me. Because what did we do? We did move down. We followed by a bear flag. And if we can get any follow through on Monday or Tuesday to follow that negative candle pattern on Friday, we could look for 74 at least. And the way I would play that, not necessarily the only way to play it, but if we go down lower here, my stop would be up here. I'd probably use options so I can define my risk. And my first target would be somewhere around the $75 level, this swing level. Then I would take half off the table. And now I'm playing with house money. I've got money in the bank. And no matter what happens, if it bounces there, I can give it room to pause or bounce a little bit here, looking for the continuation here. If it doesn't happen, I'm not going to have a loser because I'd have to let it go all the way up to here for loser. So my stop, if it moves down towards, let's do it this way. If this one moves down and gets all the way down to this level and I'm taking it off, I'm trailing it out. I'm trail stopping this puppy out. And I'm going to use probably the top of the candle before. So if I had one red candle like this, another red candle like that, that's going to be my stop for day 3 down. If it starts to go down on the 4th day, I'll use it up here somewhere. And as it gets close here, I have to decide, am I going to get it real tight on the stop and hope that it continues to go lower? My recommendation to most people is, if you can't take the heat to a normal bounce, go ahead and just take the money as it hit the swing level. If you do that, you could miss out on the opportunity for a real big runner. You have to give this room to react around that prior swing level, because you will get buyers starting to step in. All right, let's look at EXR. Extra space. Been in a downtrend. You can see that with the EMA onlys, but I don't need to do that. A break below this 105.50 or so could possibly take us down to this $99, $100 level. Could you give me 1 second? I have a problem. Okay, folks. All right, I'm back with you. I'm not sure. Oh, I just suddenly got this extreme nausea, and I felt like I might be sick. I don't want to be sick on my microphone or whatever. I'll keep going when I can. All right, so the break of this area right in here. Let's go ahead and get rid of this puppy here. Delete. Where we're at my target level would be down here around 100. ICE did this little bounce, a little reversion to the mean. It looks like it's rolling over, or attempting to. If it rolls and goes a little bit lower, which book would you recommend for understanding candlestick patterns? Rick has one. Can you ask that in just a second again, Bertrand, if I forget? Sure, thanks. Okay. All right. What was I going to do here? We got down to this $89 level and bounced. Once we look at this, it was obvious to us in retrospect that we would potentially get some buyers step up at 89. They did, and they moved it up. They couldn't move it up very high for very long. They moved it up for really a couple of days. If we bust down below, 90? We bust down below that, I think we're going to probably, we could go to this level right here, minimum. We could even go lower, say this $85 level or so. I'd have to look at Thinkorswim. We're looking at ICE. Let's look here. Yep. Okay, volume and price levels. The next volume and price level below is around 86.50. And then we got this congestion here, which is about where the rising 200 would be. That's where I would expect the target to be on ICE. What we're looking at, 85-ish. Yep. And see, that's why I have multiple tools here. My carpentry bag has multiple tools in it. And that's why I have TC2000. It's easy to manipulate the charts and the watch list. And I can look at other detailed information like volume and price levels that are very, very good in Thinkorswim. All right, another one, move on. Kimberly-Clark. With the threat of a rising interest rates, a lot of the dividend payers are starting to show some weakness. So, with that said, Kimberly-Clark, this line was drawn quite a while ago. We break down below 128.50. I have no earthly idea where we stop. Let's KMB. Let's try a 9 month. And what I'm doing is trying to look at the volume and price. If we drop there, there's a little bit right here, 125. We're really probably talking a 124 to 122. I have a deal for you, Bertrand. Stick around. LabD. LabD probably wants to hit the 17s, but what this does for me, it tells me to look at LABU for a long. And LABU over 41.70 probably goes into the $48 to $50 level. LHX. The combination of L3 and Harris Corp. The uptrend is over. We're now in an established downtrend. You can tell that with the EMA only chart, or you can tell it by the fact that it's going down. It is taking a wobbly approach there, which is why it's on the list. We break 192. We're heading into 180s, probably the rising 200 to start with. The only negative to that one for a short is that we have stochastics RSI kind of pointing upwards, but price, even though we have a quote green candle here on Friday, it opened higher. I don't use those. What I strongly suggest is I do not get fooled. Let me change. No color. Oh, up bars filled. Up bars. A lot of people will fill in and have green bars, and they'll see a green bar here and go, oh, that's positive, that's bullish. No, that isn't, because it's still going down. So even though this thing closed net up, can you see how it's still going down like this? And until we can break that trend, or better yet, until you get above this level here, it hasn't broken the downtrend. In fact, it's probably got to go all the way, in my mind, up here to over 200. Oh, excuse me. McDonald's. McDonald's last week reported that the CEO couldn't keep his zipper zipped up, and they let him go. They did a drop to this 188 level. It did a rebound, reversion to the mean. I still think that it probably looks to try to roll over if it goes below 192.5, 193. Starbucks. Starbucks has been a short for me for a while. I've taken profits. Can it go down to 78, 85? If you're already short, possibly keep going. Verisk Analytics dropped on Friday. This level 135 is one target, and then over here at 128. Let's look at a 3-day chart. This congestion over here around 125, or even using a weekly, you can now see 125 nice and clearly. Let's look at Verisk. There's volume and price around 128.75, and then right to 125. So as you can tell that over time, you could train your eyes to see the volume, where the volume and price and level would be. Did you also notice that when this thing got to the 200, that it sliced right through it? It did not stop at all. In fact, it didn't even slow down. It got a little on the other side. You got some bargain hunters, and they got wiped away pretty fast. All right, the last one's on the shorts is, I don't know if it's Zoetis or what, but basically it looks like it wants to come back down to this 115-ish area to me. Would love to see a bounce first. Love to see a bounce. Would like to see it come up here, probably back up to this 121 area, and then roll over. Then my target would probably be around the 200 or in these areas again. All right, let's go back to all right. I said to stick around there, Bertrand. We have a 2-month trial offer in the trading rooms that you can get in either of the trading rooms for $49. That is $49 for 2 months. Get to all the training, and for each of the rooms, it's what, $25 a month? It's money well spent. I'm sure the people who are members here that are on here tonight will attest to the fact that it's probably one of the best trading rooms out there. Best value, if nothing else. Hi, Byron, of course. Thank you. Try it. Try one of them for 2 months. Try the other for 2 months, and then figure out whether either one of those, or which one or both of them are best for you. Head Run Candlesticks primarily focuses on the setups of individual stocks and securities. The Right Way Options talks more about options trading and options education. That does not mean that the Hit and Run Candlesticks people don't use options to trade. If you want to follow me, I'm on StockTwits here at Top Gun Trading. Whoops, that's the offer. Let's see, copy. All right, that's my StockTwits handle. I'll put stuff out every weekend and a few times during the week. I'm usually too busy to post a lot on the weekends. My YouTube channel is Top Gun Trading on YouTube. So youtube.com/Top Gun Trading. They do not need to be capitalized, but it's easier to see when you do that. Now, this is general questions. It is not stocks. We're going to have a few minutes for stocks tonight. So, right, okay. Good suggestion, KG. But I'm also mentoring some people that have a full-time job, and there are other ways for you to possibly do it. This person's lucky enough to live on the left coast, so I'm working with them to possibly trade during the morning before going to work. All right, if you were to use the TR 2020. TR 2020 shorthand, is that okay? Hold on a second. I'm having a senior moment here. Do you mean TV 20 Trader Vision? Okay, that's what I thought. Ed is here. Ed is probably the best person to talk to about Trader Vision. I'm going to say that I don't use Trader Vision that much. I used to use it religiously, but I don't do that anymore. I tend to trade more in the futures actively, and my other trades are more short-term swings and whatever. But I definitely use the LTA scanner. So the live trading alerts, LTA, the Trader Vision, I'd let you talk to Ed about how it could be done and how it could be used. All right, let's go back up here. Bill Bowers, on your chart, is there a sideways the VWAP or similar? It's not VWAP. This is volume at price. And what I do here on that, I'm going to do studies, edit studies, volume and price. And I'm going to go over here to the sprocket and show you what I do here. All right, it's the volume point of control. The one thing you need to put to make it sit on its side and to overlap the chart, which I strongly suggest, is you have to say on expansion, no. The default is yes. Let me show you what happens when you do yes. When you do yes, it puts all the volume bars over here with the price over here, and I'm going, what? How am I going to tell? I'm going to have to eyeball over to the left to see what it is. Whereas, maybe people are thinking that they can't see through it, but on expansion, no, and play around with the opacity and make it some small number like 20, and you see through it. Now I've got a black background, it shows up. If I can't see, if it blocks out some of the candle signals or the candles themselves, play with that number. But this tells me that, and how do I use it? Okay, it tells me where the most trading has been done. Right around in here on VRSK. Well, the stock will move upwards towards these levels and fall down to these levels rapidly. So the next one that it busts through here if it's not 135, it's going to drop down here to this skyscraper of 128.65. Yes, Mary, the markets are open tomorrow. Yeah, we have Thanksgiving Day. Well, you can go out and Google the market close days for 2019, but we're talking Thanksgiving. We have a half day on the Black Friday, and around Christmas and New Year's, there's closing times you have to look at. But we're open tomorrow. There are very few. There are very few days that the markets themselves are closed. Now that could mean that the government is taking the day off and reports will not be listed. They'll be delayed a day, like the oil report. Okay, let's look here again. Barry wants to know what information does balance of power provide me? The balance of power will tell me whether institutions are accumulating or distributing stock, getting rid of. Well, when we were going up higher in this area, okay, we were going up there, and initially we're kind of neutral, but what was happening here? Balance of power, even though we had a divergence, basically. We were going up when it's basically was saying that, you know what? The proprietary institutions that the Warden Brothers follow, they're telling them that they were distributing stock to the buyers. That the vast majority of, quote, smart traders are selling. Now, does this always work well? No. There are times where these things can stay disjointed for a while. It may be closer to Chaikin money flow than on balance volume. But do a Google search for balance of power and TC2000 or Warden Brothers, and you will find a fairly extensive discussion of what it is, not necessarily how to use it. I had trouble using it at all until Doug took the time to explain to me how he learned or was taught how to use it. And I was using it all wrong, because the balance of power is not a primary indicator. At least it isn't for me. The way I've now come to use it is I'm following price first. So when ZTS was going up over here, I was looking over here and going, well, I've got a divergence here. So what is it telling me? It's telling me to be cautious. It's not telling me to sell. It's telling me that when you get the first sign of weakness, which we got right in here, you want to try to sell. Or at least lighten up quite a bit. That's all it is. It's a secondary or tertiary indicator. I use it more as a tertiary, kind of give me a kind of a warm fuzzy. If I see negative balance of power, I don't let it overrule me from going long when I'm in a solid uptrend like I was here. But if I see any weaknesses, like if I was long stock and I saw something like this, or saw something like this, I'd be selling at least some, if not getting out. Okay. Alyssa asks, how do you record data? Oh, okay. You're asking KG. Walter. There's OBS. Thank you, Walter. Have the servers record everything everybody Cool. Yep, LTA scanner, love it. You get basically real time alerts to whatever you really want. Do I use the 3 EMA? I used to. I don't, Chandru. Um, you don't see it on my chart here because it's kind of noise. Now let me put the 3 EMA on. No. Moving average exponential. Okay. Let's edit this one. Let's make it to 3. I'm going to make it orange. Really wide. Okay. All right. See how noisy this puppy is? Bouncing all over the place. This might, in fact, it has with some of my mentees. When you see this, it's going down, or you see that one, it's going down. That one, it's going down. They get scared out pretty easy because it's only 3 days. Also, I would suggest that that's a much better. If you're going to swing trade and you're trying to visualize the trend, and that's all I'm doing. I'm not using it for trying to find stocks or find setups. I'm not using it as a trigger to go long or short. None of these. I'm just using it to help me visualize the trend. For me, the 8 and the 17 work like a charm. Now, some people will kind of use the 3-8 as the trap and whatever as kind of a candidate for finding stuff. I don't have to have the 3 plotted to see where the 3-8 trap is going to be. I can tell you right now, that was a 3-8 trap. I'm sure this one was. This one might have been actually gone below it. But what you do over time is you train your brain to see the chart pattern. And you don't necessarily need the indicator anymore. But it takes a long time to do that. And if you need it, maybe put it on the secondary chart. Or put it on the chart where you can add it to it and take it away. Add to, take away. All right. Arnaldo, the ATR value that you consider in order to go long. Well, I use it really to filter out. I don't use it to filter out about going long. So let's go over to some longs here that are better. Where's my... Oh, well, we're going to use Mohawk because it worked. All right. What I use is I use the ATR numbers to eliminate, to take away stocks so I don't waste my time looking at them when there's no way I should be trading them. Now, it's a little bit difficult. I use in my scans $5 or more up to 10,000. Average daily volume $485,000 shares. thousand shares per day, and I use the ATR value over the last 14 days of a quarter or less. Now, why do I use 25 cents? I would like it to be a lot more than that, but if I've got $5 stocks, 25 cents is pretty good. If I've got a $100 stock, 25 cents is not very good. So I've kind of trained my brain to look at, I'm going to eliminate some on the filter, which is the scan. Let's go out here to personal. All stocks and ETFs. That's got all 2,480 items that are out there. Of the 6,000 or 7,000 that we have out there, I've narrowed this down to ones that have some volume. Some of them have a ridiculous volume. So this is basically all there is on the trading universe. However, there's some there, more than half of those don't meet one of my criteria. So I'm down to less than 1,500. This is my trading universe, 1,492. All the rest of them, of the 7,000, I don't even consider. I don't want to waste any time looking at them because I'm not going to trade them. So the idea is, don't waste your time trading on stocks that you, one, are not going to trade, or two, you should not be trading. We get a lot of times where somebody will ask in a room a stock that's traded 97,000 shares a day. Why is it coming up on your scan? Don't waste your time on it. It's a waste of time and energy. All right. Hope that helped, Arnaldo. And T, thanks for putting the Q there, T. Is the 45-degree runner predictable? Yes and no. When you get a gap up, like here's the yes part. If you get a gap up on earnings and it has high short interest, or relatively high short interest, it will probably take over and eventually start floating higher. I.e., Tiffany. Tiffany is going to float at some point, but it gapped up really from down here at 91. It kind of crept forward. The reason that this one did not take off on a 45 is most likely that somebody knew something a few days before and they started bidding it up from 90 to 100. But it gapped up almost 30%. So it's having digestion issues. It's having to digest that move. So eventually this one's going to probably take off on a 45-degree angle, kind of like that. Winnebago, nope. Let's go to the longs. EB, if it has high short interest, let me find one that has it. There's Winnebago. 3-day chart. It did a consolidation. Most of these that do these moves, they're going to do a consolidation of 1 to 3 days afterwards, depending upon how much it moved and the how much was short. This one, watch Z. So T, watch Z. This one is a good candidate for a 45-degree runner, at least to the 4250 level. I wrote originally the 4550, but let's watch this 4250 level to start with. I think it's going to go, and I'm going to trade this one if it starts going higher on Monday, Tuesday. All right. The other one I'm going to trade, would be Tiffany. The other one I'm going to trade is Bloomin'. If Bloomin' gets up there, it's doing a sideways consolidation. It's probably headed to 25. All right. I think Ed left. All right. See you later, Ed. Thanks for all your help. Bill, you got your answer, I think. Debo asked, do I day trade options? Yes and no. I normally get into options, but I get out on a with the daily chart. I don't do any trades that don't have a good daily chart. And what happens there is if I get really good money, I'm going to take the money, some of it off the table, if not all of it, that same day. But I'll try to hang on to it. Now, what would have happened? What would have happened if I saw the day trade of the options on Mohawk, and suddenly it gaps up each day? I'd be either chasing it, or if I got out right here at 147, it moved another 3%, another $4.70. I would have lost out on probably about half of the profits in the options there. Okay. So the idea is the other problem with day trading options is if there's some movement going on, you're going to have the premium really spike up and the spread's going to be high. So unless you can negate that with some other technique like a credit spread or debit spread or something like that, it's probably not worth it. Which is why when you get something like this at the end of the day, the options really faded back by the time we got over here to the buy signal. Bloomin', the options were really high on that first day, second day. They're probably already down. I haven't looked at this weekend, but they're down. Winnebago, they're down. Now they're down to reasonable areas that you could trade. Okay. What does the vol stop tell me? You're welcome, Debo. The vol stop gives me, the way I use it, it gives me a recommended area to start looking for a stop. It says recommended. Well, on Mohawk, it was pretty close. And on a lot of them, it might be pretty close. But on those that have moved quite a bit, they're not all that great. They're a little bit too far away. Well, AFL doesn't look bad. Where would I put my stop on AFL if I were long? Well, hopefully I got in right back here. I've either taken some profit in AFL or I'm looking to take profit pretty quickly. And where's my stop going to be? Let's get this here. Edit. Color. Red. Default. I'm going to be below the low of the prior day's candle if I can. I'm not going to be all the way down to here. Do I need to let, we're starting to run out of time again. Do I need to let that stock come all the way down to here for it to prove to me that it's not doing what I expected? Well, what did I expect it to do? Well, what I expected it to do maybe is a pause, but I expected it to do this. And if it's not doing the green and it's doing the red, get out. I don't need to. So this is I use it as a nominated stop. Don't put your stop under that. You could look at it and look to the left and see, but you need to train your brain. Where would you put your stop? Well, I'm not going to put it there. I'm going to put it a little bit under there, but that's the way I trade. Not necessarily everybody does that. Urban, they said you should probably put it here, but I'm gonna say that I would wait for the breakout. Vertex. Vertex would be here on Monday if we break out over 203. Well, they're going to say traditionally you should use that as your stop. Well, I'm probably going to use about halfway the candle. Or I'm going to drill down to a 60. Well, the 60 minute, now that's probably not a bad place to do it. I'm looking at it. Well, in fact, there's a part. I could say that would be it. I'm looking at where buyers has stepped up. Traditional support and resistance. This is just kind of like if you don't know where to put it, you might consider putting it there. But it sure helps you get in the idea that you should be moving to stop up. All right, hope that helped. Kimberly says, if I'm not familiar with the term high short interest, would you mind briefly explaining it? Sure. Let me bring it up. Okay. You obviously know, you're welcome, CB. You obviously know about stocks that have high short interest. And there are a number of them out there. And we have a number of them reporting this week. What's the best way? Hold on. I closed it. All right. Overstock, Infineon, Goose. You can use short squeeze or you can use FinViz. And what I'm going to do right now is I'm going to go to FinViz and I'm going to grab the stocks for Monday after close or before Tuesday. I'm going to filter those. I'm going to look at ownership. I'm going to look at float short. There's overstock. Now I'm going to use it as a quick way to look at. Now, if overstock, that might be a good one. Okay, let's try that. All right. Overstock came down at 970. If we get a gap up, and we have, what do we say for the short interest? 28%. Okay. Go ahead and put that down. All right. That's a high number. A very high number. If, for some reason, if you were short, where would you be putting your stop on that? Okay. Well, you might be putting it somewhere. Let's just say that it's this green line here. Let's say it gaps up to 15 and starts to run. You might be interested in trying to cover. What's going to happen, like I described earlier, is that people who are long this one already are going to try to hold on to it. Unless they bought right up here and they're just saying, thank you, Lord, for letting me get out even. They're going to sell. Those aren't the vast number and vast majority of people who are the high volume short sellers They're institutions. They've been shorting this for a while. And they're doing, big numbers. They're possibly going to use this $15 level as an area. If it gaps up and runs against it, what are they going to have to do? Well, their bosses are going to say, what are you going to do with that overstock short? When are you going to start covering? People who were not interested in overstock necessarily, but watching and waiting for earnings, suddenly it surprises and gaps up, they're interested as well. Is Macy's, Macy's is kind of, it's already made its bottom. See what I'm thinking of right here, this one might have made the bottom, but it's still iffy. well, there's JCP still hanging around, but I think this is a bankruptcy waiting for a time to happen. It's going to happen. I'm surprised Rite Aid hasn't gone out of business yet. Shield took forever. Sears Holdings. Don't know. We're consolidating. There are going to be some winners and there are going to be a lot of losers. So, Kimberly, let me know if that does anything to try to help you understand high short interest. And high is relative. FinViz likes to think 20 or 25% is high. Anything below that is not high. Well, if it gets 10% or higher, I'm going to be interested in it. Then it all depends on what the surprise was and how big the surprise was. But my observation is 10% is relatively high. Anything more than that. All right, and if you have other questions, just keep asking. All right, folks, it's 9:30. I'm not feeling so hot. Would you guys mind if we call it a night and I catch up with you guys during the week or on next Sunday? I do apologize. This is 2 weeks in a row, but I just don't feel all that great. I mean, I'm not kicking on all cylinders. Okay, I will be rendering this and posting it up on my YouTube channel later tonight. And if you want to go look at that, and please very strongly consider sign up for a 2-month trial. Give us a shot. $49. It'll be the best money you ever spent. All right, take care.